Prime Time. Replay from Money FM 89.3.
So it was a rather momentous week in terms of policy decisions from various central banks and also a number of developments in the macro space. So what have we learned over the course of the last couple of days? Well, we're joined now on the line from London by FXTM's Lukman Otunuga to help us recap again the week that was in the foreign currency asset class. Lukman?
Good morning. Good afternoon to you. Thank you for having me here today.
Good morning to you over there in London. Lukman, we have to start off with this, what was a rather big monetary policy week. We saw the recent release of the Fed minutes, which showed that not everybody, it seems, on the committee was on board with regards to keeping rates unchanged in the U.S. And you also had the ECB's recent decision. When you take all of the dynamics that these two various reports and decisions actually laid out for us this week, what stood out for you and how might this impact the dollar-euro specifically?
It was a very interesting week for markets. When we're looking at the Fed minutes and ECB decision, they both revolved around the same theme, uncertainty, U.S.-China trade developments, and global growth concerns. But the Fed minutes really stood out for me in the fact that when I looked at the minutes, Fed policymakers were simply on the fence when it came to interest rates. Now, this is very significant because if the central bank of the largest economy in the world is on the fence on interest rates and they're quite uncertain about what to expect, how does everybody else feel when we look at other central banks in developed and developing countries? So based on this, naturally, this is negative for the dollar in the medium to longer term.
The other thing we're preparing for, shifting gears now, Lukman, is a big macro week for China. And we thought those trade figures that we got earlier on today, maybe just an appetizer for what's coming up on Wednesday, because we're going to get first quarter GDP figures from the Middle Kingdom and also that plethora of macro data from retail sales, fixed asset investment, industrial production. What's the outlook from FXTM on the Chinese yuan?
So far, data's been mixed. This morning, we saw China trade figures. We saw exports rebounding by over 14%, which is quite a surprise, and imports shrinking. So the data was mixed. When we keep in mind that the IMF has actually upgraded China's growth forecasts, we could be in for a pleasant surprise next week and moving forward if economic data from China actually starts to exceed market expectations. When we're looking at the yuan, naturally the yuan will be influenced by China data, but of course it's also U.S.-China trade developments we have to take a very keen eye on. Overall, though, if you look at the yuan's gain against the dollar, trading above around 2.5%, so it's actually performing quite well year to date.
We're still speaking to Lukman Otunuga, who's out in London from FXTM. And Lukman, we have to talk again about Brexit. I know it's starting to wear on many a trader out in Europe and in the UK. Another reprieve, it seems, when Brexit is getting a bit of a Halloween extension. But at this point, do traders of the sterling even care? And how weary are they at the moment?
Coming from me, I think the only positive takeaway I saw from the Brexit extension is the fact that the United Kingdom will not be crashing out from the European Union today. Other than that, nothing much has really changed. It's simply kicking the can further down the road. When we keep in mind how UK lawmakers have already rejected Theresa May's deal 3 times and have failed to come to agreement to a Brexit alternative, if this is a theme that we see during this 6 months, the threat of a no-deal Brexit can still become a reality. When we're looking at the British pound, though, there is some complacency. Moving forward, though, all options are on the table. You know, anything could happen. There could be a no Brexit. There could be a second referendum. There could be general elections. The strategy moving forward is to expect the unexpected until more clarity is provided on Brexit. And this is why we're seeing the pound quite listless right now and just waiting for some real clarity before making its next big move.
And finally, Lukman, we saw market sentiment kind of shift in the first 2 weeks of April. We saw a lot of risk-on sentiment last week and a bit of risk-off sentiment so far. But come rain or shine, we noticed that gold for the most part this month was actually trending upward. Why do you think that was the case?
I've got gold under my magnifying glass. You know, I'm really, really watching gold. So the reason why gold is actually pushing higher despite equity markets looking positive is the fact that it's very important to understand that gold remains influenced by the dollar's valuation in the short term. Now, if we look at the dollar in the recent days, the dollar has been quite weak. Now, this is going to be a conversation for another time. So this is why the gold is pushing higher. But when we're looking at things in the medium to longer term, the fundamentals are actually in favor of the dollar. Number one, we have a very dovish Federal Reserve. Number two, concerns over global growth is still a major theme, especially after the IMF downgraded global growth. And number three, there's still uncertainty over US-China trade developments. As long as these themes remain present, gold has the potential to continue pushing higher in the medium to longer term.
And it takes us all the way back to the US dollar, which seems to be the tail that wags the dog, which is FX markets. Lukman Otunuga from FXTM, thank you so much for joining us this Friday, and have a happy weekend out there in London.